You just lost your income. The bills do not care. Inflation does not care. The bank definitely does not care. The market crashes overnight. Your savings are stuck in red numbers. Groceries cost more. Rent goes up. Your job feels unstable. And every decision you make from here decides whether you stay broke or become financially bulletproof. I have seen this pattern before. Booms create confidence. Confidence creates leverage. Leverage creates fragility. Then one shock hits, layoffs, rate hikes, a banking scare, and people who looked fine financially collapse in months. The problem is not just the unstable economy. The real problem is that most people build their lives for stability that does not exist. You might be broke right now, low savings, debt hanging over you, maybe credit cards charging 30% interest, maybe an EMI that eats half your salary. That is not just inconvenience, that is financial exposure. In an unstable economy, exposure is danger. Here's the threat. Inflation silently taxes your cash. If inflation runs at 7% and your savings earn 3%, you're losing 4% every year in real purchasing power. That's math, not opinion. Meanwhile, debt compounds against you. A 30% credit card interest rate doubles your balance in roughly 2.5 years if you do nothing. Inflation works slowly. Debt works aggressively. So the first shift from broke to bulletproof is not about investing, it's about stopping the bleeding. When I say bulletproof, I don't mean flashy cars or social media wealth. I mean resilience. I mean if your income stops for 6 months, you do not panic. If markets crash 40%, you do not sell in fear. If your industry shrinks, you pivot. The first solution is ruthless cash flow control, not budgeting for aesthetics, budgeting for survival and leverage. You track every rupee. You identify leaks, subscriptions you forgot, impulse spending disguised as stress relief, lifestyle upgrades that chained you to your paycheck. This is where internal threats show up. Ego, comparison, the need to look successful before you're stable. An unstable economy punishes ego fast. Cutting expenses is not about deprivation, it's about reclaiming control. Every fixed cost you reduce lowers your survival threshold. If you need $60,000 a month to survive and you bring it down to $40,000, you just reduced financial pressure by 33%. That is power. Then you attack high-interest debt like it's an emergency, because it is. There's no investment consistently beating 30% guaranteed interest against you. Every extra payment is a risk-free return. This is not emotional advice, it's mathematical certainty. Now you're stable enough to think beyond survival. The next threat is single-source income. In a fragile economy, one salary is a single point of failure. One layoff email can erase years of progress. So you build optionality. You look at your existing skills first. Can you freelance after work? Can you consult? Can you teach online? Can you build a small digital product? The goal is not instant millions. The goal is a second stream that covers 20 to 30% of your expenses. That changes everything. Because once your side income covers your basics, your job becomes optional leverage, not survival oxygen. I built my first additional income stream when I was tired and underpaid. It was not glamorous, late nights, weekends, slow growth, but every extra dollar went to building a buffer. That buffer becomes your shock absorber, 3 to 6 months of living expenses in safe, liquid accounts, not for returns, for defense. In a crisis, liquidity is freedom. When others are forced to sell assets at a loss to survive, you hold, or better, you buy. Which brings us to investing in unstable times. Markets crash. That's not rare, it's normal. Over decades, markets trend upward because businesses innovate and economies expand. But in the short term, fear dominates. Prices disconnect from value. The broke mindset sees crashes as danger.
The bulletproof mindset sees discounted future cash flows, but only if you prepared. You invest consistently, not emotionally. Broad index funds, productive assets, businesses with real earnings. You avoid speculation driven by hype. In unstable economies, weak assets die first. Companies with no profits, no cash flow, no moat, they vanish. You also diversify beyond one asset class. Some exposure to equities, some to safer debt instruments, maybe some real assets. Not because you can predict the future, but because you admit you cannot. Taxes are another silent threat. As governments struggle with deficits, they increase taxation subtly or directly. You use legal structures, retirement accounts, and tax-efficient investing to reduce leakage. Every percentage saved compounds over decades. Now let's talk about the biggest internal threat: impatience. Wealth building in unstable times is slow and disciplined. You'll see others chasing quick gains, crypto booms, meme stocks, guaranteed returns. In desperate times, scams multiply because hope sells. If you fall for one major mistake, you can lose a decade. Bulletproof wealth is boring. Automated investing, controlled expenses, skill stacking, continuous learning. It feels slow until suddenly it's not. Because compounding is invisible at first. 10% annual growth doubles money roughly every 7 years. That means if you stay consistent for 14 years, you're not slightly ahead, you're 4 times ahead. Most people quit in year 2. So from broke to bulletproof is not one decision, it's a sequence. You stabilize cash flow, you eliminate toxic debt, you lower your survival cost, you build multiple income streams, you create liquidity, you invest systematically in productive assets, you protect against taxes and stupidity, especially your own. The economy will remain unstable. There will be crashes, layoffs, inflation spikes, policy changes. That's not a prediction, that's history repeating. The question is not whether chaos comes, it's whether you are fragile or anti-fragile when it does. Right now, you may feel broke. That's a position, not an identity. If you move with discipline instead of fear, math instead of emotion, strategy instead of impulse, you can build financial armor. And the next time the market crashes overnight, you won't panic. You will calculate. And that's the moment you know you are no longer broke. You are bulletproof.